So, good morning, everyone, and thanks for being here today. I wanted to do a little bit of a follow up, and it's really those of you that were in the Right Way Options class the other day will have the same flavor here today. But I wanted to do something that's recorded so that we can kind of put this down where everyone can go to this video to get an idea of what we mean by a trade plan or planning a single trade. And this is the only slide you're going to see, but I do have a couple of images that I'm going to show you guys that, I'm kind of, I don't know why, just like with music, I store all kinds of, stuff. I'm kind of a electronic pack rat, I guess, with charts and data and spreadsheets and, that kind of stuff. But I also collect, things that have always meant something to me. And you guys hear me say this all the time when it comes to trading, is that if you don't know where you're going, okay, if you don't know where you're going, then any road will do. Now that's a quote from Lewis Carroll, but the whole idea is we have to have some kind of a plan that moves us in a direction. And for some reason as traders, we often want to ignore that. It's the boring stuff, right? No one wants to talk about the plan. Just give me a trade that makes me money. That's what we want. And I'm the same way. We all want that. But if you don't follow or put together some kind of a plan, if you don't know the process of going from point A to point B, you're going to have a very difficult time getting there, or may never get there unless you have some kind of a plan. And I believe that's important on every single trade. Now, I'm not talking about any kind of big, long, multi-page elaborate plan. I'm talking about something very simple, a set of rules that you follow when you put together any trade. Okay, so we're going to kind of talk about that today, and then I'm going to go one step further. One of the things that we tend to do as traders is we have no patience, and that's one of the reasons why we do what we do. We chase, we fail to plan, we're always in a rush. We don't have any patience. And here's another one of those quotes that I hold on to because it means something to me, and hopefully it'll mean something to you. And boy, it's taken a long time to load over there. Hold on, it's a big file, I guess. There you go. Patience is not passive waiting. Patience is active acceptance of the process required to attain your goals and dreams. So, truly the meaning of that is if we want to be successful in trading, then we need to have a little patience. Okay? Patience to follow a process. And the willingness to do that. See, if we're not willing to follow a process, if we're not willing to know where the road that we're on, how are we going to get from point A to point B? First off, it's almost impossible for us to see success unless we do that. So if we don't do a little bit of planning, if we don't have a little bit of patience, okay, we're not going to get there in an efficient way. And we want to be efficient here as traders, right? We need to find a way to be efficient. So here's one more on the same subject, and this is from Charlie Munger. Charlie Munger is Warren Buffett's sidekick, attached at the hip kind of thing. Big money is not buying or selling. It's not in the buying or selling. It's in the waiting. One of the things we struggle with as traders is waiting, right? We always want to chase into a trade. We're always in a rush to make a trade. But Steve will tell you this, for day trading, I'll tell you this for swing trading or position trading, is that the biggest part of the time we should be patiently waiting for the trade, not chasing the trade, not rushing to the trade, patiently waiting for the trade. Okay. And that's one of the hard things in trading is that patience to wait for a position to come to you. Thomas, I understand that. I understand that. If you're not actively taking risk or something like that, you're sitting there, you know, why'd you get up and sit down and turn the computer on if you're not, going to trade? I get that. But you have probably already proven to yourself that rushing to a trade is not working. That not planning and being thoughtful and patient and following that process to a trade. Well, that's probably true, Bal. Um, they, I say this all the time when I'm trying to learn something new. I don't know what I don't know. Um, as I'm trying to learn, you don't even know the questions that you need to ask because you don't know what you don't know. And that's what I'm kind of, I'm spending some time on this because I think this is really important. And I know everyone thinks this part of trading is as mind-numbingly boring. It's the it's the thing that no one wants to do. I just want to make money. Just give me the trade that's going to make me money. But if you want to be consistently profitable in the market, if you want to make a career out of this, you need to start treating your trading as a business. Okay? And that requires a plan. That requires focused attention to detail. That requires you to take logical steps in your risk and follow that system forward if you want to expect consistent results. If we just wing it, if we just throw stuff out there, sure, you can throw enough stuff up against the wall and every once in a while something's going to stick. Okay? But that's not good business. We have to have a plan. Now, this is the last thing you're going to see. We're going to go right into the charts, but hopefully that kind of helped making the point that we have to combine our thought of where we're going and then the process that we have to go through, I should say, the process we have to go through to try and achieve the result that we're trying to achieve. And one of the things I find all the time is that folks haven't even thought about it long enough to know what they want to achieve. They say stuff like, well, I just want to make money. Well, okay, thank you, Captain Obvious. Everybody wants to make money. How do you plan to do that? What are you going to do to make that happen? What course are you going to take? Now, there's tens of thousands of different ways that you can make money in the market. We all know that. There's systems out there all over the place. And if you stay very focused and disciplined to the system, somebody's making money with it. So I'm not trying to tell you that what I do is the only thing. What I'm trying to tell you to do is every single trader that's successful and is in this business for any period of time goes through this process of realization that I've got to settle down. I've got to focus on a process and a plan, and I've got to follow through all of these steps if I'm going to be successful in a trade or successful long term. So when we think about we're talking about just call options, just a directional call option. That one of the easiest concepts in trading. And if you missed the class last time, it is posted to the website on just call options and what we're focusing on here. So if we're looking at a trade and we're looking long for a position, anybody like Walmart here? Now, I would argue that Walmart could easily consolidate, pull back, or come back to its trend. Walmart has a tendency of doing that. Okay? But I also have to recognize the fact that Walmart is going to report earnings here on the 15th. And it could easily rally toward those earnings. So with that in mind, you take a look at this chart, and we see a chart where we've got a stock that moved up sharply, pulled back, held on to support. 100 is a natural support. Turned out to be a price support as well. Held on to that and is starting to show signs that those buyers are willing to step in. And not just one pop, they followed through on Friday. Even with the market selling off, Walmart held up. Okay? So if we were going to plan a trade on Walmart and we decide we want to do a call position on Walmart, one of the first things we need to do is how much risk is in this trade. First, we should have our plan, and our plan should tell us what our tolerance for risk is. How much can I risk on a trade? Our plan should tell us, what is your goal? What are you trying to achieve on every trade? And if you don't know those two factors, it's almost impossible to plan a trade, to be effective at planning a trade. Because if you say that my risk tolerance, I can only lose $200 on a trade, and you put this trade together, you find out where your stop loss is, and you put on a single contract trade, and you find out that trade is going to cost you $200 or $300 in risk, you cannot take that trade. It fails. No matter how beautiful the chart looks, it fails. You can't take the trade. I will tell you, I find trades like that every single day. Ed will tell you the same. He plans, we probably plan, we probably only take about 3% of the trades we actually plan, because they don't fit us in some way. There's too much risk in it. There's not enough reward in it. It doesn't fit me. There's not enough volume. So we find those trades every day. But if we don't have a specific set of guidelines to prevent us from making dumb mistakes, and the reason I say they're dumb mistakes is because don't we repeat those things over and over and over? Because if we're not planning, if we're not preparing for a trade, we're repeating that mistake over and over and over. Oh, I know, it's ridiculous. I mean, the majority of folks that comment on stuff in Facebook and Twitter, I mean, are just moronic. Simple. I mean, they've got no sense of direction of what they're trying to do. They're trying to be some kind of a hotshot and prove that they're really special, but they're going to be a flash in the pan. Just like a lot of traders, they don't stick around. They can't, because when you trade like that, you fail. So what we have to do is we have to put together that logical plan. So please take the time, guys. You need to figure out what your risk tolerance is. What is your risk tolerance? How much can I lose on a trade? You guys all know my opinion on trade size. And Ed's right here too on trade size. If you're going to put on a trade, 3%, maybe up to 4% if you're very confident in the market of your account size goes into a specific trade. You guys also know that I even believe of breaking my account down even further. I break my account down on what I'm going to trade in stocks and what I'm going to trade in higher risk trades like options. Okay, so if I were trading $100,000 account, my plan would look something like this. If I've got 100K, I've got 80,000 in stock trades that are more of a position trading plan. I'm going to have my 20,000 over here for higher risk option trading. And I'm going to use 3% of that 20,000 for my risk. Now, you don't have to use 80-20. You guys can use something else. And it's okay. Some people just don't want to trade stocks at all. And it's okay if you trade your entire account with this. Make sure you have a rule that prevents you from overtrading. And I stick to that rule. I stick to that rule. And the reason I do is because if I take a risk on a trade that's 3%, if I get something absolutely wrong, the market gaps against me or whatever, and I lose the entire 3%, which rarely happens, very rarely happens, I can recover from that. I can recover from that in 3-4 really good trades. I can have my money back. If I trade a great big position and something big in the market happens or occurs, it could take me all year to recover. So I plan accordingly. The other thing I do, as you guys know, I'm really big on this, is that market preparation. What's the market doing? Are you confident in the market? Is the stock that you're trading a really volatile stock? Should you even risk this amount of money in the trade? So just because I have a rule of 3% doesn't mean I will actually trade 3% on every trade. It may be less, depending on the market condition, the setup. You guys know lately because of the volatility of the market and there hasn't been much for swing trading going on, I've been doing a lot of these, quicker intraday trades. I risk less on those trades than I do a standard trade. It's higher risk. The faster and faster you go, it's higher risk. So I reduce the size of my trade. This making some sense? So it comes down to, that's the beginning of your plan. If you don't have this piece, you're not ready to trade. In my opinion, you are just not ready to trade. In fact, what you're ready to do, if you don't have this piece, what you're ready to do is provide liquidity to the market. Is that what anybody here signed up for? Is to be that guy, that person that provides liquidity to the market? I don't think so. Because believe me, every institution, every professional trader out there has a plan. You're competing against them. Like it or not, you're competing against them. And if you don't step up to the plate, you're going to lose money. Because they're going to use every conceivable advantage to take that money from your account. Okay? So let's say we do like, and you may not like Walmart, but let's say we do. I'm gonna kick on the volatility stop. Now with the volatility stop on, we can see that we are holding a support level. Okay? So if I look at this trade, the first thing I'm going to do is I'm going to start laying out this position. So I'm going to draw a line here, make it nice and straight. And I'm going to widen up this line a little bit so it's easy to see. So my stop loss is going to be right under that level. And why under? A question that I get on this all the time. Well, why can't I just cheat my stop loss? I don't want to take that much risk. Then don't trade the trade. If you cheat what price action is telling you, you're only cheating yourself, because what's going to happen is you're going to find you get stopped out all the time. Size of the trade, not sizes of the risk, Sue. By the way, if you guys want to know if this works, everyone's seen what Mike Peterson has been doing, right? He's been turning in 3,500, last month 4,000, this month a little over 3,000 in profits on a $25,000 account. He uses this rule. About 3% of his account into any one trade. Okay. And consequently, with 3% of his account in any one trade, you know what that allows him to do? Make more trades. Because he can spread his money around different areas and different sectors. It's not uncommon you go look at Mike Peterson's active trading screen and he'll have 15 plus trades on when the market's good, by the way. Because he has a little bit risk here and a little bit risk here and a little bit risk here and a little bit risk here. And we all know that Mike is trading a plan, right? We've seen it. His $4,000 a month last month, average win was just over $100. But he's just continuing to do the same thing over and over and over. All of his losses are small. And the other thing that he tells you, and he pointed out this last month when he gave you guys the last month's results, just a little over 3,000 in profits. He traded less last month because of the volatility of the market. He ended up making more per trade than his average because of the volatility of the market. And his losses are small. And he told everyone almost every single one of his trades came from hit and run candlesticks or right way options. Mike doesn't run a scan. He doesn't do anything like that. And I'm not saying that you can't, okay? That's just not what he does. Okay? So when we put a trade on, let's think about first what our goal is, what our plan is in the trade. How are we going to get where we want to go? How are we going to go from A to B on every single trade? How are we going to get from A to B? Mike knows that when he makes the trade. Has to move this far and I make my money. The other thing that you see with Mike, do you see Mike ever turning in great big giant winning trades? Nope. Because when it reaches his money, he's gone. I'm out of here. He puts the money in the bank. Doesn't worry if that stock goes way higher. He doesn't care. He did his job. He took money out of the market today. Okay? Mike is perfectly happy getting the first base on it on all of his trades. That's all he wants. Okay? That's right, Steve. That's right. When that money shows up, you're gone, right? Price comes in, see ya. Gotta go. Alfred, it's a goal target. And see, you can make that goal whatever you want it to be. And you can change that goal by your trade size. Let's say you look at a trade and you have the capability of trading 4 contracts. Okay? If you look at the trade and on a 1 contract trade, that trade is $3.52 for the option. We know if our goal is $100 on the trade, that has to go up $1, right? To make our goal. This is what Mike does. If he can trade 4 contracts and it fits his rules, the stock has to move up 25 cents to make his goal. Or he can say it can move up 50 cents. I make my goal, I sell 2 contracts, and I hold 2. Because he's working for profit. Isn't that what we're here to do? Is make a trade and make money. Not to make a trade and make a killing every time, but to make a trade and make money. Advance our account. If you're constantly chasing around the big win, you're going to constantly lose a lot. Okay. Now, we planned a trade the other day in TAL. Okay. What was the trade plan? Now, whether you like this trade or not, we went over this was a fairly high risk to the stop loss trade. You may not have liked the trade. It was on this day that I put this trade together. So stop loss was here. I looked at the chart. I said, here's the next price resistance. Did we have enough in that trade to make a goal? How many in here can report that they made money on this trade? Just following along. And that the trade has more upside. Sully, Francis, Nancy, Fidel. And all it was saying, okay, first target. Can we make good money to first target? We see a second target and we see a third target. So does this trade have the potential of making more than double from where we entered, more than double our potential risk? Yes. More than double our potential risk. So it's a worthwhile trade to take. Now, whether you like the trade or not, that's 2 different things. If this trade doesn't fit you, if you say that's too much risk for the trade, it's okay to walk away. Wait for the next entry. Okay, I find those all the time. Love the chart, walk away from the trade because it's too much risk in the trade. You know, I've been talking about FireEye. FireEye, love this chart. Not trading it yet. To enter this trade was too much risk to my stop, so I'm not in the trade yet. But what I do know is if I'm patient and wait, if FireEye continues to trend, there will be another opportunity. Solely sold half at first target, said Thomas. Well done, guys. Okay. So I like the chart. I like the potential. I'm not in the trade yet because the risk is too high. At least for a regular day traded, a chart, not day trading, but a 1 day chart, the risk is too high. If I go to an intraday or something like that, would have worked out just fine. For example, if we take this to a 5-minute chart, is there any trades in here on that up move? Well, my goodness. How easy was that? Okay. So, determine the time frame that you're trading and make sure that it fits your style, what you're willing to do in the trade. So I can tell you, for me, for the swing trade point of view, I'm not interested in this trade yet, but I think it's coming. Okay. So let's go back to Walmart. So we've decided our stop loss is going to go in right about there, and I'm going to draw a line right there. So about 99.32, somewhere in there, is where we might place a stop. Now, when I look at that trade, if I were to duplicate, this line and say entry in here, by the way, I wouldn't do a 99.31 or a 99.32. I would just round it down to 99.30. I'm not penny picky on a trade. So if I'm looking at this position right here, and I assume I try to catch an entry right in here, then I'm going to look out a little bit further. Where's my next resistance target? Well, we do have a resistance right here. And then we have a resistance right here. Can we make a pretty good trade on this? Do we have enough upside in this trade to make money if we put that trade on? I would look at this and say, hey, my ultimate target up here is up here. I've got easily double the potential in this trade of my risk. Okay. So if I've got a good trade, now I have to think about the timing. When you were talking about options, we got to think about the timing. How long could it take for this to move up here? Well, if we look at price action and we get these nice moves, heck, it could go up there in a couple weeks. But we also know that this could lay down in here for a couple of weeks before it starts to go. So if I'm going to plan this trade for a directional long trade, I want to give myself enough time to be right. So one of the rules of the trade is I'm going to be always looking for something for 60, 65 days plus. Okay. In time. I want enough time to give myself a chance to be right. To be profitable on the trade. Okay. So that's one of the rules. We follow a rule. We plan enough time. If I'm planning this on a 5-minute chart, do I need to plan 60 to 65 days? No. If you're doing a 5-minute chart, you're probably thinking day trade. Hey, buy the option that expires tomorrow. It doesn't matter because you're going to be out of it at the end of the day. Okay, so just plan your trade according to what you're trying to achieve here in the position. So if we're going to go into this trade, now we know what we want to do for timing. We know where our stop loss is. We know this trade has the potential for double our risk. So how do we go about putting that trade together? Where do we start looking at? Well, first, I would say there's a target up here. Will I be able to reach my goal when I hit that target? Okay, so how can we figure that out? Well, I showed you guys that the other day. If we throw up Thinkorswim and go to Walmart, and we come over here, let's see, we're going to have to go to the January contracts to reach the rule. Okay, 76 days to expiration. And I need to put this back over here because first thing I have to do is check and see if I have a trade in here that fits. I have plenty of open interest, something between 70 and 80 deltas. That's where I'm always going to be. The reason I do that and the reason I'm willing to pay up here a little bit more for premium is I have a high probability trade that it's going to still be at least in the money or have value other than time. I have a high probability it's still going to have value other than time. Okay, so I'm going to be looking probably right here. So if I'm buying the 95 contract on this trade, and I know I've got plenty of open interest, bid-ask spread, not too bad, looks pretty good. Then I start looking at how can I figure out what my price is going to be. So I'm going to change that column right there, and I usually change my open interest column. You can change any one you want. In fact, you don't have to have these same columns. You can do anything you want. Go down to Option Theoreticals and Greeks and go to Theoretical Price. And that puts the Theoretical Price tool up here in your toolbar. Okay. So if I were to take a look at this and know that this target up here, and this is 105.06 is what I marked here, I would just call that 105 on the trade. I want to make sure that this option can go up enough to make it worthwhile. So if I come over here to theoretical price and I move this stock up, I can go up $5 and then roll it back down. Here, let's just go for $4 and go to 105. By the way, one of the things I'll often do is I will roll it down below my target price. So if my target up there is 105, I may roll it down to, 104.90 and try to take my profit before it reaches 105 because I know that's a resistance target. So I'm selling into strength. I'm selling as it's going up. Okay. So if you look at this trade and we're getting it at 8, we know one contract here can make us just short of $300. One contract can make us $300. Okay. So what's your goal? Will $300 make that trade for you? When I make a trade like this, I might look at, because of the expense of this trade, I might look at doing probably 12 contracts in the trade. What if you do 2 contracts? Does that work? You do 2 contracts, the stock moves up and hits first target, you sell one of them. And take your profit. Put money in the bank. Now you can relax a little bit on the trade. And let that trade continue to do what it has to do. You could also just say, hey, you know what? $600 is $600. I'm gone. See ya. I'll wait for the next entry. There's no shame in doing that. I do that quite often. And in fact, quite often I'll plan a 12 contract trade or something like that. And it moves up to my first target and I take 73% of the trade off. You can get close, Alfred, but remember, delta isn't the only factor of the price move. Okay, because there's also gamma. So, if the stock moves up $1, we should get 73 cents plus a portion of the gamma, another 3 cents. Okay, if implied volatility is changed, that will also alter the price of the option. Okay. Greg, if you want to reduce risk in the trade and use a debit spread, that's perfectly fine. A debit spread is a long directional trade that you've just capped your potential profit. That's all. So it depends. If that's more comfortable for you, then make that trade. What Greg is talking about is doing a debit spread, buying this contract, selling the 110. Okay. Here's one of the reasons, if we have enough time on the trade, Greg, if we're right on direction, theta decay is not a really big deal because of the time of those options. If you're buying a really short-term option, if you got 30 days to expiration, you better have a way to hedge that theta decay. It's not nearly as important in the little bit longer trade. But that's entirely up to you. It comes down to a situation, well, hey, I don't want to risk $8.20. I want to risk less. And that's okay. Set that trade up. Just know that you've also got to think about your commissions. People will say, well, all right, I'm trying to reduce theta, but I pay $5 per contract, or what, I don't know what you pay for a trade. You also need to factor that into that theta decay, right? You paid up quite a little bit in commissions to try and reduce a few cents of theta decay. Does that make sense? So you can overthink a trade real easily, end up costing yourself more money. But it's okay. It's perfectly okay to use a strategy like the debit spread if you feel more comfortable in doing that. Okay. Here's what I prefer to do. If I like a trade long, I'm going to enter that trade. I'm going to let the trade move. If it moves up, then I sell a contract against it. And the reason is because I'm using the technical analysis against the chart itself. If I believe this is ready to move up, I will buy that position, let the stock move up, and then sell a contract. Because if the stock has moved up, I get further out of the money and I actually make a bigger premium on here when I do that. Does that make sense? I give the stock the chance to move. Before I place that hedge trade. So a good example of that would be my Coke trade. I got into Coca-Cola. Okay. I bought that trade. The stock moved up. I had a 45% return. I sold half of the trade. A couple of days later, the stock continued up. I had a 65% return. I sold another half of the existing trade. I had 12 contracts, by the way. So I sold 6, then I sold 3. Now I have 3 contracts left on the trade. After it had already moved, then I sold the 48 strike. 48, by the way, is right up here around price resistance. I sold the 48 strike. up here. Consequently, I collected 65 cents or something. And on Coke, that's huge. Because you got to remember, these options are under $3. And my entire hope and goal on this trade right now is pop up there and call me away. That's what I want. I want to get paid to have them take the stock away from me. I let it pull back. If it starts to pull back, I let it pull back. If it starts to break down, though, that's a different situation. Okay. So let's kind of get back and focus on what we're doing here. So in this trade, if this trade does start to move up here, I can figure out what I need to do to achieve my goal. You may have a goal, hey, I need to see $1,000 on this trade. You're trading a large account, and that is acceptable in your trade. I need to be around $1,000. Now plan your trade so that you can either sell the entire position off or take a partial profit and hit your goal. In your trade. Now, one thing I want to say about goals, this is really important. How many of you have ever seen you're in a trade and you look at your account in the morning and the trade's up $600, right? Stock has moved big, it's up $600. You get all excited about that. But you're just pretty sure it's got to go higher, right? So you're watching that trade. And then the stock starts to dribble south. And all of a sudden that $600 is now 5.25 profit. Okay. The reason I'm bringing this up is I've done this more times than I care to admit. Okay. Because I saw $600 in my account, I want $600. Right? Happened to you yesterday? Yeah, we want $600 back. I mean, hey, it was worth $600 just a few minutes ago. I want $600. How many of you have ever taken a trade like this all the way to a losing trade because you're trying to hold on for that $600? Yeah, I have. Okay. So there is a little bit of a danger in a goal. If you had a goal up here on this trade and it gets up here and starts to falter and show problems, the market condition changes or something like that, don't die on the sword trying to get your exact number. Okay, take the profit. Bang, I'm out. And if you take a partial profit, then it allows you to relax. If this stock has to pull back or rest a while before it continues on up, by taking that profit, it reduces the pressure on the trade. Bill, you know, I have said this before a lot of times. How many of you have taken a profit on a trade? You got nervous, took the profit on the trade and said, hey, I'll just get back in the next time it comes around. And then the next time it comes back around, it gaps or moves and you don't get into the trade. And you miss it. You watch it go up and you've missed it. Yeah, it's hard. It's hard to re-enter a trade. Sometimes. It's really hard. You get distracted, you miss something. Okay. And it's hard to get back into the trade. So think about that. Taking partial profit, letting the trade relax, letting the trade pull back. If you ever want to hold positions for a while, you've got to get comfortable letting the chart move. It has to pull back. It has to relax. Okay. So you can take partial profit. Now it's perfectly acceptable. Moves up there, you hit your or come close to your goal and just take the whole trade off and say, look, I'll find another trade. Not worried about it. That's perfectly acceptable. But if you have that desire to have this move on through, you have to get comfortable with the pullback. Consider this. I've been holding Walmart on a long-term position since that candle right here. So this stock moved up. Guess what I did? I took some profits out of the trade. It pulled back, messed around in here, started back up. I added to the position and I trade options against this. This moves up. I take some profits on the trade. But I held a pretty good size piece of Walmart through this entire pullback. And I was trading calls against it, hedging the position. But it's only because I put money in the bank here, in here, in here, that I was comfortable in just letting it do what it had to do. Okay. Does this prevent me from adding to the trade now? Could I have added to the trade here? Yeah, absolutely. I can add back to that same position and just keep working that position back and forth. So if you ever want to get to some longer term trades or some holds like that that turn into just giant wins, you have to be comfortable in letting the trade move. Yeah, what you don't want to do, Bill, is let anything turn into that loss. Okay? So are there risks with having targets? Yes. If we put that number in our head and say I'm only going to settle for that number, we're going to put ourselves in a bad situation here, right? We got to use some common sense as well. You know, $500 is not as good as $6, but $500 is better than $3, right? So take some profits along the way in those winning trades. Bob S., that's right. You got to pass that fear off into your confidence of the position and the plan that you're trading. And then just work your plan. Don't let that stock wiggling around intraday get into your emotion. And I can tell you the majority of time I don't watch them. I look at them a couple, 3 times a day, but I do not watch them. Because I have a trade. Now we laid out a trade. Somebody brought up a trade for PFE. We laid out a trade for PFE yesterday. And I showed you exactly on a short trade how I would do that. So we entered the position. I placed a stop loss and I placed a target on that trade to exit the trade. All in the same position. So I haven't been managing this account over here, but you guys, if you take a look, here's the order that we laid out. So I have a conditional order to exit the trade at a stop loss and a conditional order to exit the trade at a profit. And that went in all at the same time. When I have this in place, remember this was just a one contract trade. And by the way, this was set up to make 20%. Okay? The stock did not have to fall, will not have to fall very much to make 20%. It has to fall to here to make me 20%. Okay. So that's just a single contract trade. Can you set a trade up to make really good profits and have a logical plan in the trade and make it mechanical so it's not an emotional decision? Absolutely. It takes me about 15 minutes every morning or in the evening after the market closes to go through my orders and readjust my stops on trades. And after that, I'm done. Now my job is to look for new potential positions. And I don't mess around watching these wiggle around all day because my plan is in place. Does that make sense? Now, I showed you on Friday that trade where we set up those conditional OCO orders. Let me explain that for just a second. If you guys don't know how to do this, you really need to go learn to do this. Because this works great if you're just a stock trader. It's awesome if you're a stock trader. An OCO order. Say, for example, right here on PFE, we wanted to get into PFE and we just wanted to buy the stock. We could set our stop loss on that trade and have multiple price targets up here where we want to scale out of that position. And it does it automatically. You just place the orders and let the trade trigger. I do that quite a lot because I don't have the time doing what I'm doing to really watch that price action wiggle around most of the time. So what I do is I place my orders and I let the trade do what it has to do. But I'm always adjusting the stop. I'm always managing risk. And if the market changes if something fundamental changes in the market, changes my idea or my thought on this trade, I let the trade work unless that occurs. Does that make sense, guys? Now, what if you get into a chart that just really takes off and you've taken some profits and this chart just keeps looking so good? What could you do with that then? Well, after you have a good profit already in the bank, can't you just get rid of the targets altogether and say, hey, this thing's got some legs in it. This could go a long time. You've reduced the size of the position so there's not much risk in it. As a matter of fact, you're pretty much in a free trade, right? You've recovered all of your cost of the trade and made some money. Now just set your stop loss and just manage that trade until you get stopped out. Because you never know how far a stock can go. Okay. Is this, I don't want this to be boring. Is this helpful to you guys? Are you guys picking something up out of this of what it means to be a professional trader, what it means to trade with that professional mindset? Good. So we want to stay laser focused to what's going on. But once the trade is planned, you'll hear Ed say this from time to time. Once the trade is planned and it's in place, it's over. Ed will tell you that a lot of times he doesn't even look at his trades. Because his plan is in place, he understands his risk, and he lets the trade work. It's mechanical, it's not emotional. Now, the only way you can do that is plan a trade. If you don't know the risk of the trade before you enter the position, you're always going to be emotional. If you're just throwing stuff up against the wall hoping something sticks, you'll always be an emotional mess. We have to just get systematic and mechanical about our trading and plan our risk and our position. And I get so many arguments all the time from folks that, well, 3%, I can't trade 3%. 3% is not enough money. I can't make money making 3% at 3%. Well, yes, you can, and I've proved it. Ed's proved it. Mike Peterson has proven it. Yes, you can. Are you going to make massive, massive home run hits? Nope. But you're going to make consistent money. Okay. Now, the reason, if I take 3% risk on this trade, and I know my stop loss is going to stop me with a whole lot less than 3% risk in the trade, 3% of the trade size, I should say, is my size. My stop loss, who knows, it may be 1% or half of a percent. If I get a real low risk entry on a trade, I may not have a very big risk in the trade. I'm risking far less than, that 3% of the account. Okay. But that gives me a comfort level, and I'm not risking so much in every trade that I have to sit there and watch it wiggle around all day long. Would you guys agree, if you're only trading 1 or 2 or 3 trades at a time, you're almost always a mess? Because what do you do all day? Watch that candle wiggle around, right? Is there anything worse than watching that candle wiggle around to make you nervous or build emotion in that trade? And here's what happens most of the time. People are thinking, well, I'm going to do a day trade. I mean, a regular swing trade here. And the next thing you know, they're watching a 5-minute chart, watching all the noise of the market, that wiggling around, and they make a stupid decision. Anybody ever stopped themselves out of trade? Stopped themselves out of a trade before it really went up? That's almost worse than losing a trade, right? So can you guys see that relates directly back to you as the trader? It has nothing to do with the market. Can the market hand you a pile of garbage every once in a while? Yeah, it can. But most of the time, we're going around picking up the garbage ourselves, because what we're not doing is planning a trade to give us any kind of an edge at all in the position. Have you ever seen Rick put on a trade and you look at the trade and you go, man, what was he thinking? And then Rick explains the trade. I love this chart, and I'm okay if the stock pulls back to here before it goes up. And he does that often, doesn't he? He lets that stock move. Now, can you guys argue with what he's been posting on the website of what he's been able to achieve for profits this year? And by the way, all he's done is trade directional calls and directional puts. Same thing Mike Peterson is doing. He's not trading any spreads. No spreads. Zero. Not one. Does a directional trading strategy work if you use a mechanical plan and think about your entry and plan your trades carefully? I mean, does 330% this year inspire you at all? You don't have to get fancy. You have to get disciplined. Isn't there some hope in that? This is Rick's first year of trading options. Never traded options. No fancy trading. No condors, no butterflies. Straight calls and puts. Buying them only. Not even selling one. Buying them only. Is this achievable? It absolutely is. He told me, and he's repeated it several times, when I was working with him, teaching him how to trade calls and puts. He said there was one thing that I said that stuck with him a lot, and I'll say it again because I said it once here today. Give yourself enough time to be right. If you don't give yourself enough time to be right, you're putting yourself at a disadvantage on the trade right from the beginning. Give yourself time to be right. Rick follows my rules. Now, he may fudge them, here and there just a little bit. We all do that, right? But he sticks to a set of rules, and he's been really good at what he's doing because everything is very methodical on how he puts stuff together. We can all do that, which is simple calls and puts. If we focus in on the details of the trade plan. Steve, I know. Kind of surprised me too. Rick, what I normally do is I will keep the stop. Let's say, for example, in PFE here, let's say, for example, the stock just kind of camps out in here. We just kind of bounce around back and forth in here, camping out for a little while. My stop loss will stay the same. Okay. If the stock were to take off and start moving lower, moves down, and I can get myself to a break-even point sooner, I will move that stop loss down. Okay. Getting closer to my break-even on the trade, where it's really no risk in the position. But I don't want to rush that move down because we all know especially the way the market's been moving lately, we move down like this and pop all the way back up here. So I don't want to get real aggressive in that first move down. If I do happen to get a move down, moves down, pushes back up, and then I get a lower high over here, then that stop loss definitely moves down to above that point. Okay. So I try to stick with the price action. Use this long trade over here. This was an alert right here. So entry on this, in this candle here. Stop loss is very close on this trade, right? I get a big day like this, you can guarantee I'm going to be taking some profits. Because the only place I can really place my stop in here on this candle is below this candle. I don't want to give all of that candle up. So I'm going to take some profits. My stop loss will be under here, but I'm going to take some profits. Then as the stock moves up, gives this little pullback and shows strength here, my stop loss will move up underneath here. Does that make sense? I'm just letting the price action tell me, I mean, nothing fancy here. Letting the price action tell me where it wants to go, and I just follow along. And then if I see another resistance area up here, maybe this right in here, and we move up into this area, I'm probably taking some more profits. Or closing the trade, one or the other. Now, the reason I can do that is because I'm comfortable in letting the trade work. I have a plan in place. Now, I can tell you on Pfizer, a move up into here, if you'd have entered here, that would have, if you'd have taken profits in here someplace, you'd have had a 25, 30% gain. Easy. Maybe more. And I don't know about you, but I am okay. I don't have to hit 100% winners. It's easier to get 20% winners than it is 100% winners, right? I want a whole bunch of 100% winners. I mean, 20% winners. Okay. Now, the last thing I'm going to say today is being, it's about the discipline. When I look at a trade, I have to follow my rules. Okay? I have to follow my rules. Someone asked me to explain the Coke trade. Why did I get into the Coke trade? Well, again, the market's been moving around quite a little bit. Coke's one of those stocks I just love to trade. And so I watched a 15-minute chart. Downtrend right here. Broke. Stock, red turned to green. I got into this trade. Okay? So I started this trade out with a 15-minute thought to the trade. It transitioned into more than that. Okay, but that's why I got in the trade. I have to follow my rules. Yesterday, Bob C turned in a great trade on what was it? Was it FireEye? And I really wanted to buy FireEye. I've been wanting to buy FireEye. Okay, and he entered the trade on a 15-minute chart yesterday. I want to say, I think it was FireEye anyway. Yeah, if I'm wrong, please excuse me, but I looked at the trade, and even on a 15-minute chart, I couldn't justify the trade. It was like right in here. I couldn't justify a 15-minute trade. Well, CBOE I know was one, but I could not get into that trade even going to a 15-minute chart. And I didn't want to start trying to follow another 5-minute chart. That's just not my bag. So I'm not in the trade. He had a great winner on the position, and congrats to him for that. But I stuck with my rules. See, for me, it's a success every time I stick with my set of rules. If I don't break my rules, no, I'm pretty sure he bought FireEye yesterday, and in talking, and I know he bought Baba as well, um, but I asked him the question. Bob C is not normally an intraday trader, but he started trading these intraday because the market, the way things are moving. And could Baba be traded yesterday? On a 5-minute chart? It absolutely could. I mean, so you've got to set your plan and decide what you're going to do. But he was doing intraday trading. You saw it. He told everybody. He closed everything. He was done. These weren't holds. These were quick trades. And using the volatility stop, can you guys use a 5-minute chart and plan this trade the same way? Here's our entry into the trade. Here's our stop loss on the initial entry. Do we have a potential of double the potential risk of the trade? Yes. Are we following the same set of rules? Yes. Could we make a good percentage gain? Yes. You use an option on this. This was probably close to 40% gain on an option in just 5, 10, 15, 20, 25, 30 minutes. Okay. So all we do is follow a set of rules. Now, whether you want to use the volatility stop, whether you want to use something else, I don't care what it is you use, but make sure you stay disciplined to a set of rules. Don't come to me and say, well, this trading stuff, it just doesn't work for me. It's not working. It's not working because you're not doing the work. You're not being disciplined to a set of rules. Steve is an extremely conservative day trader. Consequently, he doesn't lose very often because he's extremely picky about the trades he takes. Right? It's the same thing for me with swing trading or position trading. I'm extremely picky about the trades I take. I don't violate my rules. Consequently, I win most of my trades. Not all of them, but I win the majority of my trades. Yeah, that's right. We're picky. We're picky about the entry. That's how you get a high win-loss ratio. Could you have made money on a lot of other trades if you'd have taken, broken your rules and done things? Possible. You could have also lost a lot of money. Al, no, if I'm going to do an intraday option trade, I'm going to buy a real short-term option. Okay, I'm going to look at the implied volatility, make sure I'm not getting something that has really high implied volatility. Okay, for example, if earnings are coming and you look at the weekly and it's a 150% implied volatility, but the next contract down is 40%, I'm going to do the 40%. I'm not going to pay up for the. Not going to pay that much time for the risk. Okay, but I'm looking for those quick trades, so I take that short position. If there's only 1 day left and the implied volatility is normalized over all of that, I'll trade a 1 day contract. You guys have seen me do that on the indexes. Take the Qs or something like that on a real boring day. So far, I've not lost on one of those. Or I take a 5 minute, or usually I think I'm usually doing a 5 minute trade. Take a contract that has only 1 or 2 days to expiration and trade it to a profit. But it's because I'm picky about the entry. I'm picky about the rules. I stick with the same trade. I don't try to master every chart pattern out there. I know the ones that work for me, and I just do them over and over and over. I just repeat the same thing over and over and over. Okay? So get disciplined to your rules. And that means you don't break them. I don't care if Rick says this is the best looking chart I have ever seen in my life. If it doesn't fit you, don't trade it. If I say, oh my gosh, everybody should be jumping on this trade, if it doesn't fit you, don't take it. It's not your trade. Okay? Be disciplined to your rules and stick to your plan. I would rather see people stick to their set of rules and still be struggling making profits, but they stay disciplined in their trade. Now all we have to do is make little tiny tweaks and you're going to be profitable. But if you can't stay disciplined, you're flopping around all over the place. There's a lot of work that has to be done to get you to a point of being focused in your trading. Move the goal forward. Ask yourself that question. You've got $150 in the trade. Should I take this position off? Well, if you're nervous about the trade, will $150 move your account forward? Then the answer I would say is take the profit. Move that goal post forward. Just keep it going. I watched a guy the other day. I made mention of this, Rob Booker. He's you can catch him on Facebook. He's a character. Know him personally. Sat and had a couple meals with him in Florida. Rob trades the Nadex, believe it or not. The Nadex is binary options. I mean, you can fund your account with a credit card. But he had a video on the other day, and I was watching it, and he was in this trade, and it was going against him. He was having a bad day. In fact, he said, I made several really bad decisions today. And he walked away from his computer, went and wrote on his whiteboard for a little bit, and he came back and he looked at that, and there was only like 3 minutes left on the trade. Okay. And he had 30 some dollars profit. And he just reached over and went click and took the profit, $30. Now, this is a guy who makes buku bucks, okay? He took a $30 profit on the trade. And then his words were, wasn't the trade I hoped for, but I moved my account forward. That's what I'm here to do. I do log everything, Francis. I don't have there's at nothing fancy. It's just a spreadsheet. Just a simple spreadsheet. I don't do anything fancy. There's folks who try to put together real fancy things. I don't. I log my the stock ticker, the entry, the day I enter. The day I enter the entry price, and then I leave a closing price, and I do what my profit P&L is. And and I do that more than anything, not to track my P&L or anything, but to go back and review the trades that I lost on, so that I can review and see, what did I make a mistake? Did I follow my rules? What happened in here? You can make a perfect trade. You did everything just right. And the market just, turns around and cuts your legs off. Okay? So as long as I can prove that I stuck to my rules, that I stuck to my discipline, I did the right thing, I'm okay with that. I don't like it, but I'm okay with it. But if I look at a bad trade and said, I go, what was I doing that day? What? I must have been smoking something, or why did I? And so I really work at looking at my failed trades more than my good trades, so that I can look for ways to tweak them and improve them. So you can keep that very, very simple. As a matter of fact, if you guys go over to the junk drawer, I have a spreadsheet in there that I made. It's really meant for more longer term type stuff, but you could use that easily to log option trades in. And just work through the details there. Yeah, the portfolio planner. You could certainly use that and just log trades if you wanted to. Of course, I'm going to tell you that Trader Vision 2020 is a great place to to log trades. Unfortunately, it's not a great place for option trading. It's not set up for options. Your pricing and stuff is kind of goofy, but you could still log things there. So however you choose to do it, but it is really important. Mike Peterson writes it in a notebook. No kidding. He has a spiral notebook that sits right beside the mouse on his trade. Every time he makes a trade, he writes down. Everything is in a notebook. Every month when I go over to review with Mike, and we do this every month, when we go over to review with Mike, he just hands me a sheet of paper. These were the trades. These are the results. Thank you, Steve. Okay. So, hey guys, I want to thank you all for being here today. I hope you got something out of this. Hope you understand the importance, why we put so much weight on following a plan and being patient for the trade. I mean, when you can get, old guys like Charlie Munger that have been around the business forever, that says things, the big money is not in the buying or the selling, it's in the waiting. That's important stuff right there. It's in the waiting. It's in the waiting and being disciplined to your trading. That's where the profit is. And the thing is, that's where it's always been. Is if we wait and we're disciplined and we follow a plan and we stick with a set of rules, we'll always do better. And it's the same for any business. I don't care what business you're in. You have to stick with that plan. Okay? So thanks everyone for being here today. I do appreciate it. I know you probably have a lot more things to do on a Saturday. I'm going to root for the Huskers. You can root for the Buckeyes if you want. But in about 25 minutes, I'm going to be in front of my TV rooting for the Huskers. We'll see how that works out. Steve's going to be rooting for the Razorbacks. Thank you guys for being here. I do appreciate it. I will get this video put together sometime this weekend, hopefully this weekend, and I'll get it posted on the website so it'll be available for a review. Everyone, take care. Have an awesome, awesome weekend. And I'll talk to you all very, very soon.